If you could go back in time
When I say get on the right side of change,
to buy the best performing assets way before they got big,
I bought it right then. We got in at roughly $250.
of course we would buy them. But if someone was telling you today, this is the next big thing,
The largest AI project on Earth.
would you be willing to buy it?
If our research is correct, the entire ecosystem is going to be worth $8 to $10 trillion in terms of revenue generation in the next 5 to 10 years.
Cathie Wood manages billions of dollars, and her #1 AI stock is available to us right now.
It may not be as distant as we were once thinking.
The problem is, there's a lot of noise out there.
And protests are spreading. Tariffs, zebra, on the loose in Tennessee.
So in this video, we'll focus in on the single biggest opportunity we have as investors in the AI space.
If NVIDIA's valuation is correct, there are going to be a lot of other winners. Who are they?
Because if it's going to replace us all, we can't afford to miss out this time.
A lot of disruption, a lot of disruption, a lot of disruption.
Hi, I'm Raj. On this channel, we talk about money. Did you like the intro? I tried to make it cinematic for you. So what's the opportunity Cathie Wood is referencing in the Diary of a CEO podcast? There's actually quite a few AI and tech-focused stocks she's spoken about, but the single biggest position in her flagship fund, ARK-K, is Tesla. Now, I know that's a polarizing thing to say. Obviously, addressing the Elon in the room, Musk has gone political, and that has drawn criticism, has affected valuations, and even put people who drive Teslas at risk of physical harm. Stephen Bartlett, the host of the podcast, even made this comment.
Like, I could be attacked, so I probably shouldn't get a Cybertruck.
And the other more unclear part of this is the fact that Tesla is worth so much already. How could it possibly go any higher? Tesla is a single electric car company. How does it generate trillions in value in just the next few years? The answer is incentive. There is no other company that absolutely has to make AI work like Tesla. Before we break that down, we do need to address that time Elon Musk said the president was in the Epstein files. The bromance took a hit here. So if anyone is considering owning an individual stock, the risk of losing money is very real. Of course, this isn't financial advice, just me talking to myself in a well-lit room. In Tesla's case, what Elon does outside of the companies he's at the top at is a risk. How does a long-term, future-oriented, risk-on investor look at this behavior and stay with the stock? One strategy is to better understand Elon Musk. In order to do that, we asked ourselves two questions. First, how does Elon's behavior get us humans closer to Mars? It is abundantly clear his goal is to get humans multi-planetary, and we can see this in his actions, like when he founded the Boring Company. Most people don't even know this company exists, and when we do hear about it, we sort of glaze over it because it's boring. Long story short, the purpose of this company is to dig highways underground. It's a play for Mars. I think we can agree it's a whole lot easier to get from point A to B when you're underground compared to the surface of a planet with no atmosphere and dust storms on occasion 4 times the size of Texas. For context, driving through Texas takes about half a day by car depending on your speed. Imagine driving through 24 hours of dust. It's basically impossible. And that doesn't even factor in the unfiltered radiation from the sun. Now consider electric vehicles in general being specifically well suited for Mars because there's no fossil fuels up there. It doesn't matter how the electricity gets made, as long as it gets stored and transferred, the car can go. So what about when Elon decides to get political and go full Doge? Well, here's a theory. Out-of-control government spending is a problem for going interplanetary because it's not sustainable, which puts all of his companies at risk. The method that government cuts are happening by is not popular. Some people prefer slow and steady versus a sledgehammer, but at least we can on some level understand why he's getting involved. And of course, this is a direct gateway to influence policy because regulation helps speed up or completely stop progress on future development. That's not a bad networking play if you wanted to say, do something that's never been done before that involves state and federal highways. More on that in a second. And the second question is Elon just being Elon? He's human, has feelings, and is not immune to going off on an internet rage posting session for, I'm sure, a number of complex reasons. At least he apologized, and good thing for investors, the more useful, valuable, and highly skilled you are, the longer leash you have for bad behavior. I'm not saying it's right, I'm just saying it's the way it is. If you and I wrote this on the internet, we'd end up on a government watch list. So what is the next chapter for Tesla, and how does AI come into the mix to make it the largest AI project on Earth? And also, how can we trust Cathie Wood when the performance of her fund ARK K has been underwhelming for the past few years? The key to Tesla's future is through self-driving vehicles. It's not hard to imagine a self-driving vehicle. There's one in a garage near you right now. And in Austin, Texas, Tesla is set to launch its robo-taxi service as early as next week. And all those vehicles are generating data with each trip, which is being used to train its AI models to seamlessly get passengers to their destinations and back with no human driving the vehicle. This is the competitive advantage of Tesla compared to every other robo-taxi service. All those cars working all the time, improving, learning, and adapting. And don't get me wrong, there will be hiccups on the way, but every company ever, including Tesla, that releases products or services has continuously adapted, evolved, or ceased to exist. Remember that time the armor glass on a Cybertruck broke on stage? Today in 2025, it makes sense that the next step in transportation is driverless, given the explosion of AI ever since ChatGPT broke onto the scene. And it also makes sense that Tesla has to make this work because selling individual cars can be profitable if demand is high enough, but the problem that Tesla has is their maintenance schedule is hilariously small. Car parts after the initial sale for maintenance, repairs, and modifications do carry a premium, but that's really only beneficial for other car manufacturers. There's no oil to change, no fuel lines to maintain, no spark plugs to swap out in a Tesla. People do have to refuel on windshield washer fluid every now and then, but that's probably not going to generate trillions of dollars. But what will is driverless vehicles, powered by electricity, made intelligent and reliable by AI, allowed by governments, and of course the platform that this is based off of will be from Tesla. As driverless taxis and vehicles become more available, costs come down, use goes up, and more driverless vehicles appear and then quickly become normal. Remember when it was weird to get into a stranger's car? They're called Ubers now. And speaking of memory lane, remember when we were kids on a field trip? We'd roll down the windows of a yellow school bus, and as we passed an 18-wheeler, we'd do this thing and see if the driver would honk the horn? If this all plays out, that's not going to be a thing soon because that semi-truck is going to be driverless. The school bus driver might still exist though, because someone's got to watch those kids. Now, of course, Cathie Wood should be under the magnifying lens here because her fund's performance since its run up in 2020 and early 2021 has been disappointing. But she does have an eye for seeing the unseen, and there's one huge aspect of Tesla that almost everyone misses. An investor has the right to be skeptical, but we should also keep in mind the macro environment has not supported risk on assets. Higher Fed interest rates, concerns of inflation, recessions, and global events at large have all had their effects on the markets, which led to a concentration of money into a handful of places, mainly top US stocks and bonds offering higher yields. ARK K is not concentrated in those handful of places. These are investments that are banking on the world becoming more technologically advanced as time moves on, so it's expected that riskier investments would underperform in recent years. A bet on Tesla today or any other tech and AI stock is a bet that the winds will finally change. But that brings us to the promise of the future. Wood suggested there will be trillions of dollars in revenue from robo-taxi services, but that is just the tip of the iceberg. Tesla is also pioneering into robotics, and clearly progress is being made on that front as well, which almost no one is factoring into future valuations. I want a Tesla bot, I want it to do my dishes, I'm not against dishwashers, I just hate the fact that it actually never dries the dishes. How have we not figured out the top rack moisture issue? It's ridiculous. It's a pretty easy leap to think robo-taxis will pave the way for autonomous trains, planes, semi-trucks, and even boats. But it's more difficult to see a future where AI and robotics will converge, and then there's Musk's Neuralink, which is the combination of human biology and technology. The possibilities are untapped, and valuations aren't even being considered yet for this level of tech because, again, it's hard to see how this all plays out. But then there's synergy. Musk can bring together Tesla, SolarCity, Starlink, all of his companies in ways that can be both useful here on Earth and on Mars. It is impossible for any one person to say for certain what the best performing assets will be in the future, but it's incredibly hard to ignore Tesla as part of a high-risk, high-reward strategy in the medium, long-term, and very long-term. So this is the part where I reveal my own personal holdings and show you my big bag of Tesla. And I want to be clear with you, nothing about my investing plan has changed. I know I just spent all this time making this video, talking to you about Tesla, and I'm not even a holder. So here's why. I'm not allocating any money into Tesla right now because I still think crypto, specifically altcoins, is the best place to get an asymmetric return in the markets. I think Tesla will do well in the future, but I think more people in the short to medium term, like the next 6 months to a year and a half, will have an easier time shifting to crypto instead of Tesla. And that's just my personal thoughts. So I'm trying to position early before that shift back into crypto happens, and will sell when I think it makes the most sense for me. And when that happens, I'll pay down some debt, broadly diversify, hold cash, and will keep Tesla on the radar as a high-risk single stock trade for the long term when I see an opportunity to buy. And don't get me wrong, if I had the capital right now to buy a large lump sum position in Tesla, I'd do it and just hold for as long as I could, but the YouTube money isn't exactly rolling in yet. All right, so all jokes aside, those are my thoughts. I would love to know yours. Let me know your investing plans in the comment section. Thanks for watching the video. I appreciate your time. Good luck in the markets, and I'll see you in the next video.